Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 22, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Picking up where we left off last week, the market went down for 3 days last week, got below the 20-period moving average, came into an important place. We'll get to that in a moment. And today was the proverbial DCB dead cat bounce following the completion of regular way options expiration week, where they drilled them down Wednesday, Thursday, and Friday. Traders buying puts on Friday afternoon were issued a pie in the face today with the gap higher open. That's the way it works the large majority of the time. Nothing really ever changes. Spiders were up about $5.60, about 1% today. Pretty decent snapback type operation. Where did they go to? Where's a number we spoke about last week where they would likely find at minimum of intraday support / bull bear battle type of place? It is the most recent breakout area. What is that place? We talked about 550.28. It's the same as 550. It's a big fat round number. They came into it. They hit it on Thursday, almost. Went through it on Friday, and they're back above it today. This is normal garden variety market behavior. They like to come back and double check or check in at the most recent breakout area or the most recent breakdown area. 550.28 qualifies. It's the same as 550. You have a number up here. You have another number right up here. And then you have the big fat round number of 550. It's all in the family. So the next order of business is what's really going on? Was that just a 3-day correction? They spiked the 20-period moving average, which is home base. And what do we say? What did we say when the market was up in this area here on the 12th of July, 13th or 15th of July, the 16th of July? Each and every one of those days, we would say what? We would say the market's getting a little bit far / extended from home base. She'll need to come back and check in at, or at least eat time off the clock and let home base creep up to price, or she'll come down to double check or check in at home base. Well, that obviously happened. The question is, what happens from here? Was that just a small correction back above the 20-period moving average? New highs are expected sooner than later. Or was this wave one down of a multi-wave decline that lasts for several weeks, give or take? What I'm talking about is it this? That's the low, and then we have new highs coming right away? Or do we have a higher low or lower high, depending on how you look at it, and then we have another decline? This would be in the camp of high. This is just a rendition. Lower high. So this is a retracement and a failure. Now, we don't know which one is going to happen. What we do know is where important places are. And when they're above important places, for example, here, if they're above certain numbers, we may not be looking for another leg down. If they stay below certain places, we will be looking for another leg down. Where are those places? That's an inside the number type of real-time type of thing. We're going to use those numbers, reserve those numbers for inside the number members and live room members. Don't tell anybody I told you this, but around 557, give or take, it's not to the penny, it's close enough. Around 557, give or take, is a number you might want to demark on your chart. It's really important. Staying below there keeps the lower high situation intact, at least for now. I'd put 557 on a sticky note. You know, being able to participate in both directions of the market is not something that everybody has the ability to do. It is something, however, the lazy swing trader automagical algo system does have the ability to play the market in both directions, short and long. Case in point, How about AR, Antero Resources? Buy alert issued 2912 on Friday, just about the dead low. It's up about 6% from that low. We'll call it a risk-free, emotionless trade. We'll also call it a whopper because the traders that took this trade with call options were paid handsomely immediately. How you doing? But what about stuff on the short side as the market comes down? Did we participate? Yeah, we did. Here's one on the other side. 87.46 shorted just last week. First profit taken. It's a base hit. Base hits put you in the Hall of Fame. First profit taken at 84.30. It's now a risk-free, emotionless trade. Same routine. This one worked out right away. The system will protect profits. It moves the stop to break even. It's depicted in the members area. Some might ask, hey, what's the winning percentage? Go to lazyswingtrader.com. Give the page a couple of seconds to load at the bottom. And the results are in there. And what you'll see is you won't see all the results. You'll see like the last 25, I believe, that are posted on the board. It's a rolling result number. But you'll see each and every time, no matter how often you go back there, it's going to be about 80% of the trades win. It's the 80-20 rule. Those are pretty good numbers from a swing trading perspective. We keep the losses small and fast. We take base hits and let the trailing portion of the winning trades run for more profit. It's a winning strategy. Lazy Swing Trader, Automagical Algo System. You think that was cool? Wait till you see this. From an intraday perspective, today was a bit of what we call in the trading parlance a bonanza by the end of the day. Stay with me on this. You'll see what we're talking about. So let's run through a couple of important things that were depicted in the early notes, and then we'll highlight a few other things, and you'll see how this came together today. Keep in mind, we have a pivot. Write this down on a little sticky note. 551.10. We have a resistance zone, 552.40 and 552.90. In between there is a resistance zone. Okay, fair enough. There's also an area of unfinished business where the number will be posted in real time as and if needed. So guess what? Was the number posted? And the answer is yes, it was. Above 552.90 on candle close is a hint the next leg higher is beginning. Okay, fair enough. 9:15, still before they're open for business. Here we are. Resistance zone. They were already there right around the opening bell. So we have to look higher. So what are we doing? We're saying closing candles above the top of the resistance zone. I'm going to go to the chart in a minute. I'll explain all this in a visual format, but I just want to get the data out there. So closing candles above 552.90 open the door for a leg higher toward 554.35, which is another area of overhead resistance and an area they should not be able to waltz right on through if reached sooner or later. 5-minute chart, right of the vertical is today's activity. Let's start with the overhead resistance zone they should not be able to waltz right on through this morning. That was 554.35. Big participation in the live room today on the short side. When they got to 554.35, we had a whopper junior, if you will, of a trade. A lot of traders got paid very handsomely right out of the gate on a Monday morning. Great start to the week. Nice short. Now, check this out. Again, this is still before the opening bell. You got to get a handle on this. How do you map this out before the opening bell? Watch this. As long as they're below 552.40, the door opens for a leg down. 551.10 is the pivot and important. What does that mean? That means you're likely to get a bull-bear battle at the pivot at a minimum. We'll get to that later. You'll see more on the pivot in the notes, but it is the pivot. If you've been here for more than a minute, you know how the pivot works. It's important. It's resistance if price is below. It's support if price is above. 551.10 is the pivot. How you doing? The dead low today was exactly 551.02. There are no accidents nor coincidences. It pays to have the numbers. What would you pay to have these numbers before the day even starts. And this isn't a one-shot wonder. We do this thing every single day. We don't nail them to the penny every day. Nobody's right 100% of the time. We get all that. But the reality is you've seen this over and over and over again. If you're participating in the S&P during the trading day, then you need to have these numbers. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Look at this, 958. Below 552.40, that was the resistance zone originally, and the door opens for 551.10. So not only did some traders ride it down there, but 551.10 is what? It's support if they get there. Pause the video, read the notes, go back to the chart, double check the work. This is everything from 0 dark 30 in the morning schematic through lunchtime. You got everything you need for the S&P, period. We had stocks on the move. Only 2 on the board today. We'll take a look at Verizon and Crowdsource. Monday's a little quiet. They're still going to come fast and furious. Earnings season is just getting kicked off. There's Verizon, 2 numbers in Verizon. They came to the second number, bounced back toward the first, got about halfway home. We'll call this one a dud. They just never got going, ran out of time, didn't do anything. It was really dead money all day long. Verizon. But wait, there's more. Now, how about Crowdsource? This is a daily chart of Crowdsource. So this was the third number on the board. This was the last one I had this morning. In the pre-market was 286.67. So they opened below the last number. So let's go down to a small time frame. All right, so they opened below. So this one's off the board. It's a no trade. But wait, there's more. In the live room, we start talking about Crowd. A lot of traders in the live room happen to know a lot about this industry, the tech space / cybersecurity and so on. So we were having a discussion back and forth on Crowd, and obviously we're asking me for new numbers, lower numbers, and here's what I came up with. I didn't have anything. Finally, I came out with a number long before they got there. Said, all right, here's the number. 261.81, dead low. The dead low happens to be 261.59. They went up to, we'll call it here, the high was 266.45. From a day trading perspective, guess what? That's about 2%. Pretty darn good. They even went up more later. Then they came back in. But from a stock that's getting taken out behind the woodshed down 2 big days in a row to nail it by pennies, you got to scratch your head and say, how do you do that? Very carefully. That was a live room only situation. What's going on over in Camp IWM? Well, we had that tremendous rally over the last couple of weeks. Really over 1 week, and then we had a 3-day pullback after making a high. We'll see where this thing goes. Let's check out the monthly chart, or the weekly chart, pardon me. We have big volume last week, but we do have a pretty decent weekly tail at a pretty important area on the chart. What was 224.60? What does that represent? That was the area that traders in the live room shorted the IWM. It was what we call one of those group real-time trades. And it wasn't just for the day trade. We pretty much got as much as you wanted out of this decline. Nailed almost the high. We didn't need to nail the high because we nailed the retracement. On this day, on Thursday, we shorted it at 224.60 in the live room. How you doing? Swing trade. Real time, one-off swing trade. Some of you, this might sound like, oh, you're not doing all this stuff. You're just talking about it after the fact. No, come and find out for yourself. We are doing all these things. I would put that on a sticky note, 225.25, 222.25, pardon me. I'd put that on a sticky note. That's a number that's important. If they're above there, not necessarily so much for like 5-10 minutes, but if they're up there all day and they close the day up there and they're pushing higher, then that's really the bull case to at least give a hint that they're going to test the highs. But if they can't get above there and they find real resistance right around 222.25, give or take, that's going to be a hint. That's overhead resistance until it's not. Write that down, put it on a sticky note. And by the end of today, We didn't have this all day. We didn't have it this morning. But by the end of today, we had relative strength in the IWM, my favorite market leading indicator. Brings us to the folks down at the transportation department. Not relative strength, but they were almost on par with the SPY. We're not going to make a federal case out of whether they were up or down certain percentage across the board against the S&P. But nevertheless, we have this trend line situation. And it looks more clear when you look at it on the weekly chart. And you can see here that they spiked it last week, but did not close the week above the trend line. That's important information. What we will say, at least from a weekly chart perspective first, above all the moving averages, regardless of where they are relative to this trend line, above all the moving averages, the trend is absolutely your friend. On the daily chart, above all the moving averages, the trend is absolutely your friend. Tremendous run last week, up over 1,000 points. This is a garden variety retracement right now. How about the Qs? Looks similar to the spiders. It's dead cat bounce-ish. We're not going to make too much out of it on day one of a bounce after, and the Qs were down. They were a different chart. Remember, they were building a bearish pattern. They had a wedge going. They had a gap down. Another 3 days of terrible news. Whatever the news was, just terrible price action, if you will, for the bulls. They found support, and this is just day one of a bounce. It's just a bounce after being down a lot. This is normal garden variety market behavior. Markets don't go all the way to wherever they're going in one shot. They have to suck you back in, make you believe that they're turning around, make you believe you're missing a rally. Everybody piles back in, and then they pull the rug out again. That's the way it works over and over and over again. And by the way, if anybody thinks that the market's not going to be volatile around this year's election, and I understand what happened over the weekend, Biden pulls out of the campaign, all that stuff. Now it's Harris. Maybe it's not going to be Harris. I have a different conspiracy theory. We're not going to get into it here in this video, but we talk about it in the live room a little bit. If anybody thinks that the market's not going to get wild and volatile around this stuff, you're dreaming. You're smoking ganja. We'll just keep going about our business, providing the schematics, providing the numbers, providing the trades, all that stuff, but have the awareness that the market volatility is, and is in big letters, is capital I, capital S, going to get more volatile as time goes on between now into the election time frame. That's just the way it's going to work, period. Financials, again, dead cat bounce-ish, couple of days last week of down. We'll see if it sticks. Right now, it's a bounce day of a little bit, up 0.5%, 24 cents in the XLF. We're not going to make a federal case out of it. We're going to give it more time to make a better assessment. Smashmouth got hit pretty hard on the downswing, along with the Qs, along with the NASDAQ composite. Guess what? Dead cat bounce-ish for 4% today across the semi-space, almost $10. That's a big bounce. That's money chasing the stuff that just went bananas and has pulled back. The money, meaning the people with the money, believe that they can catch a second wave of the same thing. Most of the time, they're going to be wrong. Just saying. I'll leave you hanging on that note. If I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.